Alright, great day. Today, let's discuss one of my favorite topics, building long-term savings. This is step number 5 to the 6 steps to financial security. And Choff here, admin of Life at IMG. And a quick review to the 6 steps to financial security is number 1, we need to increase our cash flow. We need to eliminate our debts. We need to build emergency funds. And next is we need to protect ourselves. So we have to have proper protection. So we need to follow all these 4 steps before building long-term savings. Or basically, this topic is all about savings and investments. Okay. So today we will learn about different types of investments and the importance of having an investment. So as we mentioned in the previous videos, it is very important we build a solid financial foundation before going into any type of investment, because a lot of people right now, Filipinos, they wanna jump into investments. So before we go into investments, we need first to protect ourselves. We need first to invest in ourselves in case something would happen to us. Example like sickness or death. That's why we need to have this protection first. Next is we want to eliminate debt. Okay. And next is we want to build emergency fund, because in case of an emergency, we don't want that our investments will go into waste. We heard a lot of stories like properties being sold because of an emergency, businesses that went bankrupt because of an emergency. Okay. Worst case, if we don't have an emergency fund, we go back into debt. So it's very important to build a solid financial foundation. And once we have built this one, then it's now high time that we can also venture into investments. So the importance of investing is this one. In our life, typically we work around age 20 years old, and we are given like 40 years productive time. Okay, so from age 20 to 60, these are our working and productive years. So we work hard, we go into business, we have a job, and we earn. But after age 60, more or less, until age 20, we are given 20 years. This is what we call our retirement years. So in these years, it might be very challenging right now to go into work. That's why it's very important that while we are still productive during our productive years, we need to save a part of our income, save and learn to invest, so that by the time we retire, in these years, our investments will take care of us. Okay, so that is the importance of investing. So there are 3 types of investments that we can venture. So just like chemistry, there is a solid type, there is liquid type, and there is gas type of investment. So solid type of investment is from chemistry, something that's very tangible, something that you can see. So these are examples of solid investments. For liquid investments, it starts with cash. As long as you have cash, you can invest in different types of financial instruments. This is what we call liquid assets. So from chemistry, something that is something you cannot really see easily. Okay, and it takes the shape of, it takes the form of its container or whatever. And then gas investments, this one is very scary, because this is something that get rich quick schemes, like examples like get rich quick schemes. So most of the time, these are what we call scam investments. So you invest right now, tomorrow, probably a few days, you can no longer see them. So these are gas investments, and we want to avoid these types of investments. So today, let's look at solid and liquid types of investments. So for solid investments, examples are businesses, properties, and even our level of education. So solid investment, example like businesses, something that we can really see. Okay, like this family is a family of wealthy people, because most of them are business owners. Okay, so you can easily see them. This family is very wealthy because they have a lot of properties. They have apartments, they have condo units. Okay, or even our level of education is something very solid. So let's say, for example, a family of doctors, a family of lawyers, or family of engineers. Okay, However, the requirements for these solid investments are as follows. Most of the time, they require very big monetary capital. Okay? Setting up a business, you need a lot of money so that you can fund your business. Buying properties, yes, it's very, very expensive also. You want to buy condo, you want to buy um, a lot, still very expensive. Especially if it's already in the city, it's very expensive. And even our level of education is also very expensive. Like going to medical school takes number of years, takes a lot of I don't know what do you call this one, a lot of years of experience, so that would also cost money. So at the same time, it requires a lot of effort when you do into business. Okay, so if you go into business, you wake up early, and then at the end of the day you leave late because you still need to do inventory. Okay, it requires skills and expertise, especially when you go into business, or what do you call this one, pursue a higher degree of education. Requires skills and expertise, and most of the time they require a lot of time. Okay, so these are what we call traditional ways to build wealth. Most wealthy people, they all have these types of investment. They have businesses, they have properties, and most highly educated people are also wealthy. So these are traditional ways, but proven ways to build wealth. The next type of investment, which I really love, this is what we call liquid investment. So as long as you have cash, you can start to invest in different financial instruments that could give you returns, good rates of returns. So it starts with cash, and you can invest in bank products. Bank products like time deposits, bonds, UITFs, okay? And you can start to invest in mutual funds. These are pooled funds, okay? And then, or you could go direct stock investing, stock market. And you could also buy financial products with cash value, like long-term healthcare with cash value and life insurances with cash value. So as long as you have cash, you can start to invest in these different types of liquid assets. The beauty of these liquid investments is that it requires very minimal capital. It requires less effort, and it requires less time. The only major requirement is that we need to be financially educated. This is the major requirement if we want to invest in liquid investments. Especially when we want to invest in the stock market, we need to be financially educated. When I invest in mutual funds, the market can go up, it can go down, but then again, we need to be financially educated so that we can maximize the return of our investments. Less monetary capital, because most of these investments require very minimal investment fee. Example, like mutual funds or stock market, you can start as low as 5,000 pesos. Okay, compared with business, you want to franchise Jollibee, requires you like 15 to 30 million. Okay, so you can see the difference. Okay, less effort, unless you go into direct stock trading. That's gonna be very tedious, something very technical, but I won't deal with that today. So less effort, because in mutual funds, you just let the fund managers do it for you. Less time, because you just keep on investing and you are sure that your money will keep on growing and growing. So basically, these liquid investments are what we call modern ways to build wealth. Okay, so we are now in the information age. It is very important that we also know about liquid investments. So if I'm going to ask you, which one do you like, solid investments or liquid investments? You know what, I really love asking tricky questions, but I'm pretty sure you've said liquid investments, but I tell you, all wealthy people, they have liquid investments and solid investments. So I'd say both. We need to have both uh, types of investments, but as of now, we can start with liquid investments. So let's understand further about liquid investments. Most people, in terms of saving and investing, they have cash. They want to put it somewhere safe. And a lot of times they put it in a bank. And the banks, they give you less than 1% per year. In fact, right now that's 0.25% per year. Have you ever asked where does the bank put the money? Okay, so the banks put their money in financial institutions like mutual funds, and the mutual fund company, they earn around 8 to 12% per year. Okay, so the banks invest in mutual fund companies, they earn 8 to 12%, and they give you 1%. Okay, however, these financial institutions, they invest it directly in the stock market. They invest it in stocks, or they can invest it in government securities or bonds. Okay, so in the stock market, they can earn probably higher than 12% per year. So if you are financially educated and you understand all these stuffs, you can actually invest in investment companies like mutual funds, so that you can enjoy the rate of return of 8 to 12% per year. Or if you become highly financially educated, you can directly invest in the stock market. You can do stock market trading, or you can do stock market investing, and you can earn greater than 12% per year. Okay, so when you look at this, you put your money in the bank, you are a depositor. That's why you earn very less interest. This is what we call low risk, okay, but low returns. If you're gonna invest in mutual funds or financial institutions, instead of you managing or investing your money, fund managers are gonna be doing it for you. So that's why they give you like 8 to 12%. This is what we call moderate risk and moderate return. Okay. But if you're gonna do all the investing, or you're gonna do all the research, if you're gonna do all the buy and selling in the stock market, you can probably earn higher returns, greater than 12% per year. But this is what we call higher risk and higher returns. So understanding about investments really need financial education. And this is what I love about IMG. Once you become a member of IMG, you have access to all these financial education training and lectures. So the advanced training courses for IMG members, so in-depth training on different types of investments. So we do intro to stock market and real estate investing, okay, and then basic and advanced training on mutual funds. So IMG is advocate on moderate risk and moderate returns. That's why we highly recommend, as a start, you can invest in mutual funds. Okay, so we have advanced training on mutual funds. So in the stock market, just basic and introduction, and a little on real estate investing also. In investing in mutual funds and stock market, we have this technique called the money cost averaging. Okay, how to minimize risk in investing in mutual funds and stocks. The different types of mutual funds, there are bond fund, there are balance fund, and equity funds. We need to understand what is the purpose of these different funds. And then, of course, via investments, we can do retirement planning. This is very important. We now have the tool, we now have the vehicle. We need to pair it with a purpose. What is the purpose why we invest? And one of the purposes is retirement planning. And another one is college planning. So there are a lot of things you can learn here in IMG. Once you become a member, you have access to our training courses like workshops, lectures, one-on-one consultations, conventions, market updates, and these online video training courses. So I really look forward for you becoming part of IMG. Be a member now. Click the sign up button somewhere in this video, and I welcome you in advance. Have a great life here in IMG. Thank you and God bless.